We'll welcome in Jim Iuorio, the managing director for TJM Institutional Services and the Unfiltered Investor newsletter. Now, Jim, thank you so much for being with us today.
Thank you for having me.
Oh, we're so glad to. Now, we have seen all week President Trump calling for interest cut rates. Now, do you think that we need to see some big cuts soon, or are they down the line a ways?
Okay, so need is probably the operative word here. And I'd say the answer to that is no, not really. I hate to give credit to Donald Trump because I think he's right. I think that the situation does call for some interest rate cuts. And I'll point to a couple things in that. One, the real estate market has already seemed to have turned around if you go by inventory around the country. And that doesn't show up in the CPI to a 6 to 8 month lag. I might have that a little wrong, but not much. And then you look at the labor data from last week. So first off, the ADP number comes in and it's somewhat trash. Then we get the NFP, and everybody thinks it looks good because the headline beats, but all it takes is a quick look under the hood to know that private company jobs are going down, government jobs are going up. Yes, they're at the state level, and there was about a 5-minute period where I thought I was supposed to care about that, but no, they're non-productive jobs. And then you look at hours worked per week, which is trending lower to 34.2, which is usually the precursor to job loss. And I'll add one more thing is that when we came off a period where there was a worker shortage, and I know it was a couple of years ago, but those scars remain. So I think a lot of these big companies are very reluctant to open the doors to let people go. But I think when it happens, it's going to happen soon. So do I think they should be easing? Yeah, I think they should be easing. Is it imperative? Not that they do it today, but sometime soon.
So if they do it sometime soon, when do you anticipate that might be?
I think the September meeting. I think they don't want to do it July. And there's a thing, too, and this is not a political observation at all. But if you're that chairman of the Fed and you've been someone who's successful all your life, and he does have a reputation to being somewhat stubborn, and the president keeps shaking his finger at you, calling you an idiot, all the things he's doing, there probably is a proclivity for him to not want to look like he's caving to the pressure of the president. That being said, I think the market is saying September. He will probably cross his fingers and hope we can make it to September without any sort of big market dislocation. But there is one other thing, too. The Fed balance sheet, which they were using quantitative tightening to run off over the last several years, that's kind of leveled off. So there's really not a lot of quantitative tightening going on anymore, which is a little quiet, buried ease that's somewhere in the back of the picture that might be supporting markets as well, and the macro picture.
So there's another component here to this interest rate discussion is that Jay Powell has repeatedly said that he can't make any determination on lowering interest rates or not until we get to the end of these tariff discussions, which now we know are still now moved into August. At what point might we actually have that information, do you think? And do you think that the concept that the tariffs themselves will be inflationary is overblown?
I was going to ask you what the clarity was on that. I don't know. Who can ever predict what Donald Trump is going to do going forward? It's very, very difficult to do. I'll tell you one thing is the market is becoming more and more comfortable with tariffs not being particularly inflationary. Everyone, all these analysts at the beginning of the year said tariffs are strictly inflationary. They're missing the point. History shows us that, one, the exporting country oftentimes subsidizes the commodity being exported. The exporting company sometimes compresses margins to stay competitive, as does the importing company. And only then does it get to the consumer. And it's not even inflation in the truest sense, which, as we both know, is a rate of change. It's not a one-time price adjustment. So we're seeing now this happening all year with the tariffs have not been inflationary. But then all of a sudden this week, we see the one in copper where copper shoots up 15%. I can't see how that's not going to be inflationary if that one sticks, because we don't produce enough copper in this country to satisfy our demand, nor can we flip a switch that turns it on. But it is ironic to be arguing that tariffs aren't inflationary, which I have been arguing in the week that the one little thing that could be inflationary surfaces.
And I was planning to talk to you about copper because I know that it's been one of your largest long positions for a long time, even without any of us knowing that tariff was coming, that 50% tariff. How has that changed your thesis, if at all, with this meteoric rise we saw in copper in response to that headline?
So since I don't believe the tariff is going to stick, I hedged some of my longs. Like you said, I've been long copper for about 3 or 4 years. My initial thesis was electronic vehicles, but as soon as that came out of the picture with the Trump election, it morphed quite easily into power needed for AI, quantum computing, crypto, both mining and servicing the space. So I really do think we're operating at a we need more copper, and it's going to be a good position long term. That being said, a 18% move off of a Donald Trump headline to me seemed excessive, so I did hedge some of my positions. I'm still long, mind you, but I don't think this is the right move. And I'd love to say that I made money on it because I predicted this coming, but I certainly did not.
Well, I certainly think you made some money, though, at least. So that's okay. Whether or not you predicted it.
Wrong.
Now, somebody else that's had a meteoric rise that I do want to talk about before we have to say goodbye is Bitcoin. Hit a new all-time high today. I think they may have touched another one just since I've been talking to you. I'm going to double check there at 113,732.53. Bitcoin has been on such a wild journey, almost moving into this sort of safe haven reserve asset space. What's your take on Bitcoin and how much farther it can run up?
So to say safe haven and Bitcoin in the same thing, I know what you're getting at, and I don't disagree, but it seems kind of ironic because the thing can move, have 30% swings in a week quite easily. So I'm not sure it's that safe. So my thesis on Bitcoin always has been broad adoption. It has been for years. What's gone on in the short term, and I put this yesterday morning, I put it out to the subscribers to the Unfiltered Investor, is that if it trades 110,500 or 111,000, that was breaking out of a 2-month-long consolidation pattern. Now, the fundamental story hasn't changed. When companies like BlackRock and the United States government are spreading and expanding their footprint in crypto and Bitcoin specifically, that's something I want to be involved in. And I don't really care about the technology behind it. I just care about being left on the sideline if it's rallying. Now to the technical part, it breaks out of this 2-month wedge pattern, and all of a sudden everybody's jumping in when it hits 111. So this has been a good move. My target on the upside in this move from a technical standpoint, this is not the fundamental argument, from a technical standpoint is about 122,000 to 125,000 in this move.
And how far up you think? So you think we could potentially see a 125 in the near term?
That's what I think. Within the next few weeks, my target is 125. But as far as long-term goes, I think in 10 years' time, Bitcoin's either going to be $1 million or it's going to be zero. I actually think if I had to place a binary bet on one, I'd say it would be zero. But why do I hold it then? Well, in case I'm wrong. I don't want this thing to shoot up to $1 million and be left on the sidelines, because if it does, the backdrop will be somewhat scary, because at the end of the day, it is a hedge against stewardship of fiat currencies, particularly the dollar. And I don't believe we have particularly good stewardship of our currency. So I'd like to have dollar hedges like gold, silver, Bitcoin. I did have real estate, but I'm getting out of some of that because I think real estate's extended a bit. Platinum, copper, things like that.
Jim, some really interesting insight. We really appreciate you being with us today. Again, that's Jim Iuorio from TJM Institutional Services.